We've had a very busy, successful year, outperforming again. We've leased 1.7 million square foot of space. There's 450 deals. We've launched successful developments at Whiteley and Hereford. And we've bought and sold a lot of property. So all in all, yes, a very good year. Well, the leasing market's improved over the course of the year, as we were expecting at the beginning of the year. It's been with a great range of retailers, with our traditional retailers such as Next and Debenhams, creating a great new flagship store for Next at Camberley, but also expanding retailer formats such as Joules, Fatface and Topshop, all of whom took space for the first time out of town at Whiteley. Over the course of the year, we've seen retailers become more confident about the role of physical space in an omni-channel world, and that's what's given them confidence to accelerate store expansion programs as they see how the consumer shops in many different ways on different days. Despite the rise in internet shopping, our footfall metrics are consistently better than the market. Research shows nearly as many parcels are now collected from stores as are delivered to people's homes. And our exit surveys show up to 25% of people who go to our mid-sized shopping parks are using click and collect. So it's not surprising that footfall trends on our shopping parks are consistently ahead and a key driver of our overall outperformance in footfall. For a number of years now, we've talked about polarisation in the retail market and how we believe that the best space is going to outperform secondary space and there's going to be a continued divergence. And we've seen that over the course of this year. Our consistent rental growth performance gives us comfort that we're providing the right kind of space. Our rents have been growing as the economy has grown, but that's not the case with the secondary market. Stock selection is so important. We've invested in our assets to ensure they remain relevant to consumers and occupiers, and traded some of our more mature assets. Over the past 3 years, we've been looking at continually repositioning the portfolio. We've sold assets where we think it'll be too expensive to reposition them to a modern format, such as Basildon and Bon Accord. And we've bought high quality assets where we believe they will deliver the space that retailers and consumers want. This is why we've recently increased our holding in Hercules Unit Trust from 40% to 60%, and the 26% equity share in a portfolio of some of the best Sainsbury's superstores in the country. It's been another busy year on the development front. We started the year with the opening of Whiteley, which had an incredibly successful launch, and we're now on site with Phase 2, which should open in 2015, which will be a cinema-anchored scheme with food and beverage. During the year, we've also completed a major extension to Glasgow Fort Shopping Park, where we've added a cinema and food and beverage offer,